Okay. Let's see if this thing works, huh? Waiting. Got the thing over here. When you guys can see and hear me, just let me know and we will get started. All right, cool. Let me see. I think that sounds like it's up. What's up, guys? When you guys can see and hear me, say what's up. Let me know right in the chat box. Say what's going on, where you're coming from, how you are doing on this great little Wednesday we got here. It's nice and foggy. San Francisco, no surprises. And cool. It's good to be here. It's good to be back on the live streams. Today we are going to just kind of do a live show, but really my goal here is to just answer as many questions with you guys as I can. We don't get a lot of chances to do that. I know that it's helpful to a lot of you, so that's really what we're going to do. So typically what we do is kind of run through everything, and then we do Q&A at the end. Instead, I want to pepper it through. So we'll talk about one thing. Feel free to ask any questions. In the meantime, I'll do some questions. We'll do another thing. We'll kind of bounce around a little bit just because I know everyone's on a different schedule. Not everyone can stay to the end. So first things first, make sure you hit this thumbs up button if you are ready to rock, if you are enjoying crypto and crushing it in life. And then we will get started. I think people will start to roll in here. And I'm looking over here because that's where I can actually see the screen and like what I'm talking about. So just type something in, type your name in, say what's up, introduce yourself into the chat. I have no idea how many people are here, but I'm sure it's a good amount per usual. And let's get rocking. Today, let's talk a little bit about what's going on with our good friend BTC. I'm going to make sure I don't cover myself up here. As you guys can see, we've been looking at this longer wedge. And I will say, let's just kick it off by saying one of the big stories is if you go to the daily, and let's look at what is considered to be the death cross. As you guys may have seen, if you don't know what that is, it's when two moving averages collide. Specifically, I could probably get rid of this red line. The 50-week moving average and the 200-week moving average. Meaning, like if you took the average of those time frames and created an average line, that's where it would be. Now, this is going to look different depending on the time frame. But the idea is that when these meet, that is theoretically, it's a very bad sign. It's a bearish indicator, or it's like a switch in the overall market scheme. And so there's all this fear-driven headlines about that. Will it happen? Potentially. If we get some more green candles, we could potentially bounce off the 200 and go back into business, just like a trend line. If it crosses, we will cross that bridge when we get to it. But that is the big news, so to speak, from a big long-term perspective. We don't harp on that. Now the reality is nobody really knows what would happen if that did go down, but so it goes. Now this morning we're seeing a little bit of a drop off, as you can see here, and it seems like it's always amazing to me how many of these price changes really do line up to time zones, right? You look at the population of crypto, and you look at it, while it is a 24/7 global market, it's still a people market for the most part. Obviously, there's algorithms and everything else, but like if I wake up at 4 o'clock Pacific time and make decisions about price between 4 and 6:37 a.m. Pacific, it can be very different than if I wake up at 7 or do trade between 7 and 10 a.m. Like a lot happens within these weird hours. Similarly at night when it's morning on other sides of the world. And so I think that this is always, I'm always apprehensive to trade into things that are happening based on the time of day, just because it's often just one of those kind of emotional things that's not always going to be a short-term trend driver. That's like everything in life, but everything in markets too. Nothing is an absolute, which is why I don't speak in absolutes. And I would encourage you, anyone who does speak in absolutes, probably wouldn't trust them. Someone who's like completely certain of what the future is going to look like. So that's what's going on this morning. I thought that this was going to actually have a much bigger dip. We saw a little bit of a dip right here with Bitfinex on their status update. And now we're seeing a drop off. The big thing that I can't seem to figure out is Tether issuing $300 million worth of new tokens yesterday. Because typically when Tether releases new tokens, when they grant new tokens specifically, it fuels a lot of new margin funding, and then there's a major bull market. Now, the problem is, though, we've never seen it happen. The last time this happened was in January, but we haven't seen a big funding of Tether, especially on Bitfinex at least, in a down cycle, like a major down cycle. And the question is, does that mean that they believe that we are in a brand new kind of bull reversal and they're going to drive it up as much as possible? Or is it a $300 million kind of settlement layer so that if there's a massive run, they can cover their losses? Nobody knows. But that to me is this is a very strange thing to happen. And I don't think anybody can say it's going to be bullish or bearish yet. But I do think that this indicates to me something big is going to happen with Bitcoin in the foreseeable future. And, charts typically in crypto, bulls have always managed to defy the laws of logic and technicals. But as the short pressure and as the bear pressure continues, you just never know. So, it's something to think about. And we'll just go from there. So let me say hello to a few of you guys. Thank you for joining me. Let me see who's here. The whales are scheming. They are the whales. It's funny how people think that, like it's an us versus them mentality, right? Like, oh, it's the bulls. Oh, it's the bears. And many traders just kind of say, well, I am just a pawn in this major game. And while I do think that there's a lot to be said for that, like there's obviously an incredible amount of manipulation in these markets because there's no regulation. I think that it's a dangerous thing to think about how you are in a world where other people control your destiny. And this has nothing to do with like positive self-talk or anything. I'm talking about like making money in crypto. So you have to have a humility first and foremost, but you also need to have an attitude that you can beat other people at their own game. Just because they're whales and just because they have a lot of money and they can move the market doesn't mean that they can outsmart you every time. And I would be very cautious of anybody, whether you are a passive investor, whether you are a day trader, it doesn't matter. Try to assume that you are, or start to think about yourself as one of the top people in this space. And if you don't think about yourself like that, that's fine, but you should start to create the skills so that you do, because otherwise it just becomes like a blame game. And like, oh, well, that's what they did to me. That's what the whales did to me. That's what the bears did to me, or the bulls or whatever, instead of just owning your own actions and learning and getting better. I think it's a really important thing that I see a lot of, just taking that, kind of changing that mental script that so many people have. Let's see here. What is your favorite coin? All right, we'll do the coin thing. Like, hey, what are your thoughts on this coin down the road? But I'm just less interested in individual coins right now. I'm really interested in ideas. And here's the thing. I mean, I think a lot of people, this is what drives some people crazy about Coin Mastery and myself. I get it. Is that I don't give clear conclusions of like, this is the coin, buy this at this price, and you're gonna be rich. I don't say that. I don't make those claims because I don't believe anybody knows that. Unless you have insider info, that is luck, right? You can do all the research in the world and you can never predict with 100% certainty anything. You can make good probability bets. What I'm really interested in is ideas, especially ideas with precedent, and how tokens, coins, whatever, can supplement those ideas, or in better case, solve the problems that those ideas are around, and make bets or investments based on that. And it's a little bit of a nuanced thing, but I think that I would encourage anybody, when you say, hey, what are your thoughts on this coin? Take it a step further and say, well, what are your thoughts on this problem that needs to be solved? So let's say Litecoin, for example. What problem is Litecoin solving? Let's say it's solving payments, for argument's sake. A better question is, hey, what do you think about payments being solved in retail by Litecoin? Like, what's your conclusion on that? That is a much better question. And as anyone will tell you, the better questions you ask, the better answers you get. And the better answers you get, the better information you get. Better information, better decisions, more money. So I would just encourage people to think that way. You will make, it's going to dramatically improve the ROI on your portfolio long term. Jason, what's up, Jason? Given a bear market that happened on the last death across, what's your strategy to play this current potential cross? My strategy is what I've been talking about for the last, I would say, 2 months now, which is trading, more short-term trading, whether it be day to day, whether it be within one day, whether it be over the course of a week. But I think that's the only way you can play it, is as uncertainty rises, your flexibility needs to rise with it, or like the decision to be a long-term holder becomes with it. That's another way to do it. I know for myself, I would much rather be a trader, an active trader in this kind of market than other people. I have the time to do it. I have the resources to do it. Many people don't. And so that means that maybe you're a holder, but you can still make a decision on how much exposure you have. So I think for me, it's trading. I think for other people, a decision is, you got to be so honest with yourself about the position sizing. I personally think a lot of people have way too much money in cryptocurrency. It doesn't matter how much I believe in it or how much you believe in it. What matters is if you go broke or not. Because that's like a real thing. So I would encourage people to keep, make sure your position sizing is smart. Be honest with yourself about it, and realize that even if you have a tiny bit of any coin that ends up going huge, that is all you need. Like, you only need like $1,000 worth of a coin. If that's the coin that wins, that's going to be more than enough money than you could ever need in your life. It's like 1,000, 10,000x return. That's my advice. But it's not professional advice. As always, daily reminder, I'm not a professional financial advisor, nor is any of this professional advice. This is just my opinion. I'm just a random dude sharing my thoughts on markets and cryptocurrency. So let's see here. Jamie. What's up, Jamie? Polymath. Hey, Carter, I'm still bullish on Poly. Am I still bullish on Poly? I haven't heard you discuss in a while, so curious if you're still holding. I'm very bullish on security tokens. I think Polymath had a first mover advantage. I think that Polymath has some really, they have some momentum. And I think that they could easily, if they did win the wrapper, if that's the way that the security market ends up going, then they're going to crush it. So what I mean, for anybody who doesn't know, Polymath is built on Ethereum, but it creates an ST20 wrapper. So if you take a token and it gets the ST20 Polymath security protocol kind of approval process, it can now be traded as a security token because it interacts in a way that is compliant, let's say, with the CFTC or the SEC in this case. So if tokens go the route where they're like, oh, well, to be securitized, we just need to go apply this wrapper to it, and then we can go on any exchange. Polymath is going to do really well. If instead it actually has to be built as a security token in itself, and there's nothing to do with the wrapper, it has to do with more like the exchange and the SEC filings and the Howey test and all that, then you're looking more into security protocols or even security exchanges like the T0s, the Harbors, the Templums of the world, which are actual like ecosystems built around securitizing assets. I personally do not know which way it's going to go. Polymath is kind of the fast and simple way to do it, but these other ones are slower, bigger, but more robust to do it. So I bought Polymath mostly as a hedge, and also because it was the first to market. It's a hedge in the sense of I don't know which one is going to go big. I would obviously love to buy a little bit of all of them because I do think that securitizing tokens is going to be one of the biggest markets ever. I think that brings up another point, right? Like growth of a market, right? If crypto, if we go on CoinMarketCap, if this market cap number, let's say this goes up to 10 trillion, I think a lot of people assume that, okay, well, 340 billion into 10 trillion, that's like a 30x, right? So obviously all of these prices are going to go up 30x. And that's not how it happens, right? Because to get to that 10 trillion, there's going to be way more coins. There's going to be way more people. There's going to be way more other things involved in the price action. So the growth of this market will not necessarily lead to price. That's why I look at trading. That's why I have different perspectives than other people. But you got to keep that in mind, is that if the market does not outpace the growth of the demand side, of the supply, I should say, it becomes more important to actually find the winners than to just be early. So that's like a famous quote, right? Like, don't just be early. You got to be early and you got to be right. And that's a big thing that people forget. And it's not just about picking the coin. It's about picking the right coin, holding the right coins, knowing when's the thing, like, whatever. All right. Let's see here. Every crypto vlogger preaches that they're not a certified financial advisor. Do you think there'll be an accreditation for crypto trading someday? Yeah, it's called being get a Series 6 brokerage, or maybe a Series 9, I think, is the financial advisor. Like, you could go be a certified financial advisor, like you can go be a certified accountant. But even still, you can't give professional advice unless someone's paying you. So I could start a paid service and I could go become an accredited professional, right? Whatever, with licensing and everything. And then I could hire people, or people could hire me as a service, and I could consult you on how to invest your money. Like, that's what financial planners do. But if you don't have all those things in place, you can't do it. And that's why it's very true. Like, none of this is professional advice. This is just me on YouTube and on Twitter. These are my thoughts. This is what I think, and this is what I'm doing. But I can't professionally advise anybody in any sense. So, but that's why they say it. And the reason why everyone says it is because the rules are incredibly strict if you don't do that. For good reason, right? Like, because people will listen to anybody that sells them stuff and make huge financial decisions on it. All right, let's see here. Let's see here. If you could please give your insight on Nano. I don't know that much about Nano other than, I've used it, obviously. I sold most of my Nano a while back, but I think it's really hard. I think it's going to be really hard for any coin to go really big in the next 5 years that doesn't allow things to be built on top of it. So, like, essentially a protocol layer. So without knowing the complete inner workings of Nano, I do think that it's interesting that it's so fast and then it has, zero fees, and it's not necessarily a blockchain. It's more like a mesh network, or whatever you want to call it. But it does seem, I don't know, something about it just doesn't seem like it could take over huge industries. It seems like it's more of like a niche boutique product that's solving a niche boutique solution very elegantly. And there's something to be said for that. I don't see the competitive advantage of that as things like Lightning and Stellar and Litecoin continue to evolve with such momentum. And maybe I'll be proven wrong on that. But again, I don't know enough about Nano to really give you a full download on that. That's just what I would say. All right. Man, it's so funny how many people just you just want to hear about coins. And here's a question that I would ask. I would tell anybody to think about. And this is a really, really important question for anybody who's like, what do you think of this coin? What do you think of this coin? How many people do you know from the internet that got rich because they owned a stock and held it for 20 years? Maybe not personally, maybe you've read it somewhere. But the answer is not a whole lot. And now, why isn't that? Why did we go through the 90s and people weren't people were, I can tell you that. I mean, I was young then, but from talking to my coworkers, from talking to my parents, all their friends, there was this thing hey, what stock are you buying? What IPO are you buying? But there was a lot of, it was all about the arbitrage, right? The IPO arbitrage was a big deal. Buying it when it hit the exchanges and when it skyrocketed. I mean, it was very similar. But it was rarely about which are you holding. AOL was the first real one that people thought might be a huge deal. And we all know what happened to that. So as you guys are thinking about, hey, what do you think about this particular coin in terms of price? Ask yourself, well, when are you going to sell it? When are you going to know when to sell it? Do you have price targets? So even if I said something, I'm super bullish on one thing or super bearish on another thing, do you know what your plan is? Because at some point, this is going to either go up or it's going to go way down, whatever. The people on the internet who owned all this stuff, vast majority of them didn't make money. Even if someone was like, here's the right thing to hold on to. You got to remember this stuff. This has all happened before. And we're in a unique position now because we have a few at the top, in my opinion, that have momentum, right? It's going to be very hard to kill any of the top 10, top 20 coins. But the short-term price action only works if you have a plan. I can't tell you this enough. And, again, this is the kind of thing many people don't like to hear it. Many people do. That's what I'm here for. Let's flip over to CoinMarketCap for a second. Always switch over to the BTC versions. And as you can see now, we went from 2 days ago, Monday, it was massive upside. Yesterday was kind of some upside. And then today it's kind of hit or miss. And you can see the kind of euphoria as it relates to Bitcoin getting built into the charts. So the question the question I'm thinking about, I would say, in terms of, okay, alt season, what's going to happen, what's going to go on, it's the same thing I've been talking about. In this 24-hour period, right, on Bitcoin in the dollar, right when it started skyrocketing, everybody was like, oh, I believe it's going to happen again. And then here, as seen in the slope of the curve, people are like, this is definitely going to happen because look at all these people still buying, even though I'm not. I know a lot of other people are. And then you see now where it's starting to even out and you start to see the price and you're like, well, Tether's coming or the bulls are going to come or who's going to do it? But there's a great book that you guys should all go check out by Nassim Taleb. It's his latest book called Skin in the Game, where he points out that people that talk versus people that actually do stuff, that is one of the biggest problems with society right now. And you can drill it into crypto where it's like what people say and what people do are so different when it comes to money. And that's one of the reasons why charts are so amazing, in my opinion, is that talk is so cheap. It does not matter what people say. All that matters is what they do. And when you're looking at the cryptocurrency, when you're looking at the charts and you're looking at Bitcoin, you're looking at altcoins, this is telling a story that people are not as bullish as they say they are. If they were, this would be screaming. I mean, last few altcoin seasons, it was like 40% every day. And obviously the kind of apples and oranges to a certain extent. But look around on Twitter, look on Telegram. How much are you looking to go get more money so that you can buy altcoins versus how much are you waiting for other people to go buy altcoins and so the market all goes up to give you the reassurance that we actually are in a bull market so that you can go buy. And that's the thing. That's the process. And that's the stuff I watch because those are the macro nuances that many people miss. They get hung up on these prices and they miss what's really going on with the sentiment, with the micro decisions. The people, when you wake up in the morning and you open up your computer, why are you buying or why are you not buying? And more importantly, what's the emotion that's driving that buying decision? Is it security? Is it guaranteed? Is it risk? Is it hope? What is it? And that's the big deal. That's the game that should and always will be played. All right, let's see here. Jonathan Carter, are you saying that holding is a meme that will ultimately make us lose money? Not at all. But holding only works if it goes way up, right? So if there are thousands of people, there's thousands of stocks that people held all the way from the top of the bubble to the bottom of the bubble in the 90s. Was holding a good strategy for them? They thought it was. Why didn't they sell? I don't know. The same, I love crypto. I personally believe that this industry is going to go huge over the next 5 years. But does it mean that holding the entire time is the best strategy? It very well could be. All right? It depends on personality. It depends on what coins you're holding. And the problem is nobody knows which are the right ones. So for all I know, that could end up being the best thing. I do know for sure that from a tax standpoint, it's very advantageous because you get long-term cap gains. So I think that's something that you really want to think about. But going back to that question I asked last week on Twitter, it's like, how would you want to know the price of a Bitcoin, or what time frame would you want to know the price of Bitcoin? So if you knew Bitcoin was going to 100,000 US dollars in 5 years, a majority of people would say, oh, then of course I would be a holder. No question about it. I would just hold. I know it's going to 100,000. But by the same token, no pun intended, in 2015, if I told you that Bitcoin was going to $5,000, and you're like, oh my God, I'm totally going to hold. That's great. But you would miss selling at 19,000. Because if you had known when to sell, you wouldn't have lost a vast majority of that wealth that came from the bubble. So you just never know. Knowing the path can be more lucrative than just holding for the future. It's just not for everybody. So it comes down to passive versus active investing. And I think that a lot of people think that Bitcoin and Ethereum and Ripple holding these is like conservative investing. And it's not. It's still super risky. And so that's one reason why I'm trading more than I ever have been, as opposed to just blindly holding, because I want to take advantage of whether the market goes up or whether it goes down. All right. Let's see here. Since the coins are not seen as shares, how is it share in profits as a company that gets mass adoption? That is going to be a big deal as the SEC creates securitization. One of the big things about if you want to get a company public is you need to get registered with the SEC. You need to register it. You need to fill out your forms. And then you need to provide your 10K every year that shows a very clear set of earnings reports. Now, this is the problem that they're running into. they don't know how to like value cryptos. They don't know how to put an earnings report on it, which is a way for investors to do it. So the answer is nobody really knows yet, right? Like what sort of profit sharing means, how token economies versus equity value investing works. It's all very much a gray area because there's dual incentives on that. So, we just don't know yet. One of my favorite protocols, I don't know, all of them, like the one that wins. But I would say Ethereum's obviously got a lot of probably the most applications on it. Bitcoin with Lightning is going to be interesting. Cardano's got some good dev. It's just seems a little overvalued to me personally. Neo's got a lot of interest. I mean, it's just like top 20. Just that's it, right? The ones that are winning. I think a good thing is always ask developers, what are they like building on? And then start looking at what are the existential threats, things like that. How do you make money? How do you make money day trading if you pay about 1/3 of your gains to the IRS, especially in California? You have to pay both federal and well, if you hold it, it's at $1. But if I day trade and I make an extra $1 and I have to pay 40% of that to the government, I still end up with 60 cents. So if I day traded, I get $1.60. If I didn't, I get $1. So it's still profitable. I'm not saying I like paying taxes by any means, but you only pay on the profits that you make. It's not like you pay on the amount of money you pay. So it's kind of like asking someone, how could you ever work at a job if you're making $50,000 a year when you're paying 40% of it to the government? Like, how are you making any money? It's the same exact thing. Well, you only pay it on the money you actually make. Same sort of deal. Carter is pantless under there. That'd be pretty funny if I was. How do I feel about using bots to trade? If you have a bot that works, that's profitable, it's as good as it gets. It's really hard to get a bot that trades profitably, consistently for a long time. So there's a reason why PhDs and the most insane scientists often end up at places like Renaissance and Palantir and all that. Don't forget loss you can deduct. Actually, Charles, you can only deduct $3,000 of a loss on capital gains each year. Now, if you're registered as a trader by the IRS, which most people do not qualify for, then your trading counts as a profit or loss. But that's a really important piece, guys. Capital gains, you can only deduct $3,000. This is not like an expense in a business. This capital gains losses are like, you can now, let's say you lost like 50 grand, you can take $3,000 loss for a couple of years. Like you can defer the losses forward, but that's a huge thing. You got to make sure that you know what's going on with that sort of thing. Not professional advice, by the way. 40%. Whatever about how can you take that? People should put together the wall and shoot. Yeah. Okay. Yeah. Sweet. Other words, day trading is very risky. It is very risky. Yeah, I would definitely say that. And I would encourage as many people not to do it at all and let me go make all the money. I would be more than happy. So feel free to sit on the sidelines. All right. Cool, guys. Not everyone in the U.S., sir. Man, you guys are really salty today, huh? I guess that's what happens in bear markets. Anyway, Binance got some interesting stuff. Interesting to see what they come out with this M. A lot of people speculating it's going to be margin trading. I think it might be the Mac client. We'll see what happens. Twitter's CEO came out and said that Bitcoin might be the world's single currency within a decade. I think that this actually is, Jack is an interesting character. I think the people got to remember he's also the CEO of Square, which has released an app that does Bitcoin payments. And however well Square's app does is very much indicative of their stock price. So, everything's a press release when it comes to corporate America. So keep that in mind. And I think that's kind of like most of the headlines, at least that matter. I'll take a few more questions. But yeah, I think like this is just great data. Like some people just get so pissed about things like taxes. They get so pissed about day trading being hard that they can't get the right coin. And like, guys, like, what do you want people to, like, what do you want to hear? Like, what do you want someone to be like, oh, here's push this button and you're going to be a millionaire? Like, I'm not trying to be harsh. It's just like, this is a market. Lisk thoughts. They do a lot of good development. Let's see. Time to be proficient at day trading. So I think, remember, it's all a sliding scale. You can be a trader, but you only, so like the best traders in the world, they trade like 3 times a year. Like you go look at guys like George Soros and Jim Rogers, right? They had, what was it, the Quantum Fund or whatever? They did 100% over a decade. They do like 3 trades a year. Same with Warren Buffett and Charlie Munger. They maybe do 1 to 5 trades a year. And then you look at hedge funds and maybe they do 1 trade a month or something like that. And then you get into trading desks, which is what I think a lot of people are thinking about, which is when you get into day trading and you get into high frequency trading. The more short term you get, the more you are going to get smoked unless you have some sort of competitive advantage, specifically through software. Now, some people will be like, oh, yeah, I can draw a descending triangle and a descending wedge, and I can predict moves on the 5-minute chart. But over the long term, 1, that's a very hard game to win. 2, it's just the liquidity is not going to work out. Even if you're trading with like 100x margin, it's very difficult to do without massive amounts of leverage. So I think that when you say trading, it's more of like when you look at your portfolio each Monday or Friday or once every 2 weeks, not being afraid to sell something, not hanging on to stuff because you just hang on to it because you bought it and you like it and you got this great idea of what it could be in the future. You're willing to exchange it for something else. You're not afraid to trade that coin based on how the market is changing. And I think that's something that a lot of people just don't do because they're like, oh, I got to pay taxes on it. Oh, because it could go big. Oh, we're back in alt season. There's just a laundry list instead of being like, here's my criteria. Here's how I trade it. Boom. So trading does not mean day trading. I think that's a huge misconception that many people have. How did I get started as an entrepreneur? I hated my job. I was working at a startup in Maine in 2008. I watched the economy crash. I watched everybody I knew get fired. I watched my salary go down by 30%. And I hated it. So I walked into my CEO's office one day and I told him I was leaving. He told me I was going to be the biggest failure and I wasn't going to make any money. Told me to get out of his face. I left. And I spent the next 6 months walking around in a small town in Maine, and I didn't know how to code or do anything on websites. And I would take WordPress themes, and I would stay up all night, which is where my love for Red Bull started. And I would build websites for companies that didn't have websites yet. And then I would walk in with the website already built on the domain. I would go buy their domain, host it for them, walk in and show them the website already built and say, I've already done this for you. Will you buy it from me for $400? I would just cold sell. And I would say 70% of people told me to get lost or would be like call the police or like tell me I was doing something illegal. 30% of people would actually buy it from me. And I did that every day. Stayed up every night, learned how to repurpose these WordPress themes. I would build websites for people that didn't even know they hadn't hired me, and I would just go every day and just try to sell it. Just walk in the door. I would go into sushi restaurants at their lunch break with my laptop open and just try to sell it. And I would come back every day and sell and sell and sell to pay my rent. And I kept doing that. Got a job at a startup, hated it. And then I started developing iPhone apps and did the exact same thing. And I just hustled 18, 19 hours a day. That's what I do. You always say the industry won't grow unless more money comes into the market. Are you hearing anything from institutional investors? There's tons of news of funds taking small positions. Yeah, but it's too small. So institutional investors, they can't drop $5 million. Like, it doesn't make sense for them. It's like, how can they deploy $100 million into crypto? They can't. That's why we need people that can put in 100,000, which is our friends and our family, getting them to sign up for Coinbase, sign up for Binance, sign up for Bittrex, get in the game, and then buy 20 altcoins, get excited about it, put more money in. That's what grows the market. You want an altcoin season? That's what we need. That's what we all want. Some people feel weird about that, but if you believe in this industry, you shouldn't feel weird about that. You should be happy to get them in here. And that's an interesting psychological thing, huh? Say one word. What are you all guys buying next? I don't think you'll read my message. Please reply. If there's a majority of something, I'll buy that. Bitcoin. Do you think we'll ever see big institutions get into the crowd with large amounts of consideration? They know the crowd's ahead of them. Yeah, absolutely. But why would they buy in right now? Like that. If you wanted to win, why would you walk into a party when everything is like pretty good and be like, oh, I'm just going to join in now, and hopefully it works out, but like you're not going to play the game until you know you can win. Like, that's how competitors play at the top level. And these guys are competitors. They do not lose money, period. That's why everyone hates them, for good reason, because many times it's like they do it in unethical, scummy ways. But that's a big piece. Ask yourself, how could you get into crypto with 100 million and know that you would not lose? Answer that question, and then you'll answer the institutional question. That is the big thing. All right. If you have some time, I would love an answer regarding ICOs mixing fiat and cryptos as a revenue model. I've been stuck at this for months. Would it be an issue or not at all? Mixing fiat and cryptos as a revenue model. That's a good, that really just comes down to what's considered security and what's not, like what lines are being crossed, because that's like the bigger piece, right? That's the regulatory. The other piece of that is from a consumer standpoint, the more options there are for consumer choice, the lower the conversion rates. That's a very important piece of sales psychology. So if you say like, oh, well, we take US dollars, we take euros, we also take Ethereum, we take Litecoin, that confuses consumers. They need one option. This is what we're doing, period. And that's how they can raise a lot of money. So I think there's a lot of different pieces that go into that, if I'm understanding it correctly. So yeah. By crashing the market 80% first and then already buying in. Yeah, potentially, but well, you'll see. I would get in when I see the market having fear. I would get in the market not when I see people having fear, but when I see people selling all their crypto, when people giving up. That's what happened in 2014. People just gave up. Carter, what was your biggest win? Well, I wouldn't consider any investment my biggest win. I would consider probably, the people in my life being healthy. From an investment standpoint, probably going big on Ethereum in 2016, probably the biggest one. Stellar was pretty big last October. If you looked into any coins that are making the crypto space a more user-friendly environment, grandma usability, Black Hat is one in researching. I think it's less about the coins that are making the industry more user-friendly. I think it's the infrastructure. I think Coinbase is doing a great job. I think Gemini is doing a great job. I think that obviously they could do a much better job. I'm not taking, by no means do I think that they have handled any of this in a support issues and things like that. But I I do think that without Coinbase, crypto would not be anywhere near where it is. That's been a big one. I think that as you see, like Abra's doing interesting stuff, Square's doing interesting stuff. It's just about how do we get more people to take their money and turn it into crypto. Like ATMs could be interesting. I actually think ATMs is a really interesting business model for crypto because it facilitates people putting money into the system. And that is the biggest problem. I mean, there's all the psychological problems. We talked about that in the survey yesterday. Sorry, I should say objections. But like the bottom line is you have to get them to put the money into the system. That's the same thing like in sales and marketing, right? You could have 1,000 people that say like, yes, I'm so interested in this product. I want to buy this product. I can't wait. And only 200 people are actually going to give you their credit card and buy it. And of those 200 people, 20% are going to ask for a refund or chargeback or some whatever. So like it's all about behavioral, and behavioral comes down to user experience. It comes down to brand. It comes down to user experience, things like that. Much more so than the promise of what it may be over the long term. I mean, the short term promise always like obviously kills it. Like look at BitConnect. The SEC won't touch Binance for issuing securities. Will Binance ban USA citizens? I don't think Binance would ban USA citizens. The SEC wouldn't touch Binance, the company, but they could stop U.S. citizens from using foreign exchanges. Could. I'm not saying they will, but it's certainly a possibility. Are you still a fan of Civic? I am a fan of Civic. I think that, I should say, I'm a really big fan of Identity. I own Civic. It's probably the only identity-focused blockchain platform I'm in. And the reason why is because it's a company. It's like a real company. I think Vinny is a very, as controversial as it is, I don't agree with a lot of stuff he says, but I do respect the role that he has in the ecosystem. And I also know that he is playing in the world that is required for a lot of companies to go big, which is the venture capital world. He's playing a much different game than most people are playing. And as abrasive as that may be, and as wrong as he may be about certain price calls, he's been very right about many business calls. And so I like that. I just like the identity space in general. I think that it's a huge problem. So I mean, like probably the problem that needs to be solved, not just in blockchain, just in general. I mean, look at Facebook and Equifax. I mean, look at Twitter. You can't even get yourself verified, and you're getting all these people that are just asking for Ethereum. It's it's crazy. Let's see here. Thoughts on. Can you give me some books for trading or tips where we can study? Yeah. Go to Amazon or coinmastery.com/store. It's one place to start. I would encourage you to go on. YouTube is just such an awesome resource. There's so much free information. Obviously, the chart guys, which I mentioned yesterday in the video, they got a killer YouTube channel. You can look, like they have courses. Look at yesterday's video if you want to see what those courses are all about. But they have really good stuff. Who else puts out really good technical stuff? I mean, I'm a big believer. The Tim Ferriss, you guys know I'm a huge Tim Ferriss fan. He always goes out and finds top performers, and he asks them the questions like, what makes you a top performer? And I think any sort of technical analysis or even just trading is you learn the skills of, let's call it technical analysis, of reading charts. And once you learn the skills, then there's this huge secondary learning curve. And that is what they call, experience and mindset and psychology, but it just comes from having skin in the game, by actually trading with your own money and learning by being in it and applying your knowledge to that. And unfortunately, I think that most people learn the other way. They put 90% of their time into the learning every single chart pattern, and 10% of their time in actually putting in, like, getting real life experience that is risky and like having something to lose, basically. And I think that's a bigger conversation about the education system and things like that. But when you study all the top traders and you study the 5 to 10% of people who do succeed and who do make a lot of money and who do win in this game, as success as measured by successful trades and potentially by profit, they all say the same stuff. They say, look, yeah, learn the basics, which is all, you can find it all on YouTube, babypips.com, free resource. Go check them out. But the real game is the mindset and the experience side. And so one thing I do, I spend like 2 hours making sure I learn what's going on in the charts. I see other people's charts. TradingView is an awesome place to get resources. And then I'll spend 2 or 3 hours trading, but I'll trade with like $10. And it doesn't make a whole lot of money on most of the trades, but I'm just going for a win percentage. I'm trying to see, like, can I get this right over and over and over and over and over? And then when I see something really tee up for like a huge win, I have the confidence to really lay it down, and then you can reap the rewards of a big one. But you get that batting average up. I think that's the big thing, because it's one thing to look at this and scroll out and be like, oh, well, of course, when the RSI is overbought, it's going to go down. And of course, when this is doing this, but when you're in the moment and the future is not there, and you've got a whole lot of money on the line that you have to, obviously position sizing is another, you got to be smart about that. It changes everything. And that's the real game. And that's the thing that most people don't focus on, because it's hard and it's stressful, and it's a lot easier to just learn how to identify descending wedges and Fibonacci retracements than it is to put your money on the line and in a way that you cannot lose it. That's when it gets really interesting. All right. What are your thoughts on Cliff High using predictive linguistics to predict the price moves of crypto? I don't have a lot of thoughts. I think that I'm stoked anytime somebody is doing their thing. And that guy's clearly just doing his thing, and I think that's great. And I think that he's got he always has interesting things to say. I've listened to a couple of interviews of him, and I use it as a data point that I can match up with my own macro, with technical, just kind of see what it is. But I think you never want to put all your faith into one person or one idea or one ideology even, because, especially in markets, because it's just, you got to keep an open mind. You got to stay humble. You got to be like, you got to go into this being like, I do not know anything. I just have the tools to react to anything that does happen. And that's really the only way you can win over the long game. Whether you're a holder, whether you're a trader, it doesn't matter. All right. You never talk about EOS. Any thoughts? Good and bad investment? No, I don't really have any thoughts on it, actually. Let's see here. Do you have any tips for networking with other crypto people? Any Oregon, Portland conferences coming up? Tips for networking with crypto people. The first thing is know what you want when you network with people. I think a lot of people go to conferences and they leave the conference and they're like, that really wasn't a very good use of my time. That wasn't really that exciting. But they didn't have something that they really wanted to get out of it before they went in. So I think before you do any networking, I think what you really need to do is be crystal clear about what it is, who you want to meet, why you want to meet them, and what would you measure after the conference is over and say, this is a success. So for example, let's say you go to a conference and you want to find somebody who has a profitable trading algorithm. And you know that when you come back after this conference and you go home, you will have had a successful conference if you have 3 names of people that have profitable trading algorithms that are available for you to invest in. That's a win. So you got to know what it is you want. And I think that's probably the biggest thing that people They go there, shake hands, maybe have some business cards, and they're like, so what do you do? Like, what's your portfolio look like? Like, I got into Icon too. Oh yeah, that was great. I mean, this has been a hell of a market. Like, that's not what are you doing, right? So go in knowing what you want to do. The second piece of that is have something to offer other people. Many people, both in networking and just really in anything, they want people to, they want like lightning to strike, and like go into a conference and meet someone who's like, oh yeah, great to meet you. By the way, dude, I got this amazing opportunity that, you just seem like the right guy or the right gal, and I'm going to give it to you because you're in the right place at the right time. Like, that's a scam. But if you go and you like help and you provide free information, you provide free energy, you provide insight, guidance, skills, whatever, and you volunteer that first, you may not see a return on that on everybody, and you may not see a return on that immediately, but at some point that will come back in a big way. So I think you always want to give way more up front, and then either they reciprocate naturally, or you can ask and they will reciprocate through that sense. So you can go on and on, but it really comes down to intent and being like deliberate about that intention. Other than ATMs, what ways can you see implemented to get more money into the market? I have an idea. Contact me at chat. I'm unsure of the share of idea with nothing ventured, nothing gained. How do more people get into the system? I think it just comes down to like custodial services, to be perfectly honest. I think index funds, ETFs, just like making it feel safer to people. People already buy stocks. They already buy mutual funds. You just gotta, because they trust it. It's a trusted institution. That's the big thing. Like, it's not a matter of, if people want crypto, they're going to go get crypto right now, unless it's illegal where they live. The bigger problem is the perception of crypto. Nick, hello from SF. What's up, Nick? All right, let's do a couple more questions, then I'm gonna roll out. I'm actually not going to be doing videos for like till Tuesday, I think. I got a cruise, and I'm not going to be in a place where I have any internet, so tier, but we'll see you guys soon, I'm sure. Which problem you see for which there aren't any cryptos yet? Which problem do you see, Carter, for today, which aren't? That's a good question. I think that there's a crypto for pretty much anything. There can be a case for it. I think identity is a huge one. I think that's going to be a big problem. I think it might be bigger than any crypto we know right now. I think that I think the advertising industry needs a token, and like obviously there's like 55 ad tokens out there already, I'm sure. Doesn't mean any of them are going to do it well or do it right, but that is a huge problem. And it's a big problem both on the payment side and on the, like the tracking side, right? I can't remember that exact word that they use for that, but attribution side. That's a huge industry. Social networks, stuff like that. Last one, Dehan. How can you tell if we're at a peak of a cycle? I'll tell you exactly how you can tell. There's going to be a moment in the next couple of years, assuming you stay in crypto. Maybe it happens in the stock market. I don't know. When two things are going to happen. One, you're going to wake up every day and be like, I finally got my break. This is happening. This is going to be huge. And you didn't have to do a whole lot of work for it. And the second piece is when you wake up and you start saying to yourself, no, like it is inevitable that I'm going to make money at this point. Like no matter what happens, I'm going to make money. It's just a matter of how much. When those two things happen again in cryptocurrency, maybe this year, maybe 2020, maybe 2020, I don't know when. Mark my words. That is when you need to sell everything or sell majority of it into stable coins or into a conservative investment, whatever, and you will watch it crumble. But that is what happens. It just feels too good. It feels too inevitable. And it's the hardest thing in the world because every cell in your body is going to tell you that it's going to double tomorrow and that if you don't get out, you're absolutely crazy. But guess what? Everybody feels like that. All right. With that, guys, I'm going to sign off. It's been real as always. And remember, guys, this is a gift that we have been given, right? It's bear market, bull market, whatever. This is a huge, unbelievable revolution that we're experiencing. If you're in it for the money, you're in it for the money. But that's also what causes the good and the bad, I should say. But it's always a pleasure to be here. It's always a pleasure to talk to you guys, help you guys out as much as I can. I'll be back next week, probably on Tuesday. And until then, I will see you later. All right, peace out.